What's up, everyone? Again, back with another video. I think this is like the second video of the week that I'm going to be uploading. It's actually way better than I thought it would be for this week, especially because I've added a second account that I'm managing on a live account. I'm managing a second live account, and I think that's what's also made this week a lot better than what I thought it would be. So yeah, pretty much that's my introduction, and I'll share a couple things, um, well, most of the things that have been going on for this week. And then I also wanted to share this quote. It was, each moment of a terrorizing experience seems to last forever because the environment is assaulting our senses. So what Mark Douglas means by that in The Disciplined Trader is that we have to, as a successful trader, you're gonna have to go against your human nature. Human nature meaning the things that come to us at this point, almost as you could probably say, uh, there's something when you do something like second nature, right? If you're second nature breathing, right? Breathing is something that comes second nature. Uh, what else comes second nature? Blinking is typically second nature just because most people do it, once they're born without much training. It's not like you have to teach us like like blinking is way easier than it is to teach somebody how to walk. So that's why I say that blinking is second nature. I wouldn't really consider walking a second nature, but maybe it is. I don't know. I've never looked that up. I would imagine that blinking is second nature though. However, what else is second nature? I would probably say taste is second nature. Like our five senses are second nature. Hearing, like listening, is second nature. Um, yeah. And I'm I pulled up like this quote inspired me to pull up Google and just Google in what ways do we go against human nature as a trader. And Google finds that fear and greed goes against our human nature. Emotional decision making, such as chasing losses, overconfidence, impatient, and lack of discipline, informational bias. So there's like four different things that mainly um that we mainly go against for human nature as a trader. So let me know what you guys think in the comments about that. What else do you guys think is a human nature that we go against as a trader in order to be successful? But yeah, that was a quote by Mark Douglas, and I just added to that. Like, comment, subscribe. Let me know what other things you guys want me to go over aside from what I'm going to look into today, in more videos going forward. And if you guys have not already, get yourselves access to my Discord so that you can learn how I was able to profit 400 plus dollars. So I was able to profit a couple $100 in the market so far this week. Right now on one of my accounts, my second account that I'll start showing you guys, I profited about 422 so far. And you guys probably know this by the thumbnail. I'm gonna put in the thumbnail a picture of the profit from because I use the trading platform called Tradelocker. And me my headset died, so I'm gonna have to charge it. I'll reconnect. It was on 10%. I don't know how it died already. As soon as I started not the live, the YouTube video. Hopefully you guys can hear me now, but yeah. So I'm gonna get down to P&L. So TradeZella. I'm also gonna show you two of my accounts. First account is the one where I'm still actively in the 160 to 1,000, and I am also gonna start showing you guys my second account where I have more equity. I don't, it's not like much, $1,000 in equity. I'll show you guys where the account is at now. But you guys should probably have an idea by now, I'm sure, from, this video, how it's going. All right, so starting with, how do I share this screen? 1 second. Let's start with TradeZilla. I'm not sure if it'll allow me to. All right, there it is. So this is gonna be TradeZilla. This is the clear as day. This is the first account that I've been using. You can tell from one, the net P&L. Net P&L. I've been trading this account since maybe I want to say probably not November, December. Okay, I guess maybe January 2025. So since earlier this year, and since I've started with this account, you can clear as day see I've been in negative to $728.87 in drawdown. Not bad. It could be worse, right? It could definitely be worse. Now, I also want to let you guys know in this account that I started this week off red, right? So you can see negative 82 plus negative $3 is about 85. So negative like 85. I was able to secure profit. Today's Wednesday. I was able to secure $82 in profit on top of 38 in addition, right? And when my account dropped around Monday, negative 82 on top of the negative 30, $3. When my account dropped, it was, I think it was around like yeah, it was around like 220. Then I got like $80 deducted, which had me short the 160, right? At this point, I was below the 160. I might have been around like I think like 130. I just remember that I had to upload. I imported about 100 or not 100, $25, 20, yeah, $25. I imported $25 in order to replenish what I had lost. That made me drop below the 160. So I technically started back fresh at on Monday at 160. And being that I started back fresh at 160, that led me to here, let me show you guys. All right. Yeah, so that led me to equity at 284. So I still brought the account from 160 to about 284. Technically, if I didn't have positions right now, it's really at realistically at 272, which is still a good amount of profit. But yeah, still a good amount of profit. I'm currently in an NZD, USD, and Euro USD sell because my philosophy this week is that USD is bullish. I'll show you why I think I'll show you guys and explain why uh more in depth this time on why I think this week USD is bullish. My previous video, I did markups and I showed you the pairs that I have that I have interest in, which would be USD pairs, including other pairs. Um, but yeah, close positions. My best trade that I had so far this week would be this GBP JPY trade that I took. I shared this trade along with the other trades that I participated in this week or I'm actively in for this week. I shared all of these ideas in my Discord, which is why I have my Discord link in the bio so that you guys can feel free to watch exactly what I'm entering, and you can also see why I'm entering these trades. Gives you a better idea and understanding of market. market flow or, order flow of the market so that you guys also are knowledgeable about these opportunities that typically come on a weekly basis. So that, if you want to participate in those type of trades, you can feel free to do that stuff on your own as well. But it's a free trading community. We share ideas in there. And I also have a journal, trading journal type um chat along with the Discord, my Discord that I allow you guys in so that you guys can see when I'm getting in specific security or, trade and also when I'm getting out. So I share my stop loss, my take profit, and exactly when I'm entering the trade. Um, just in case somebody wanted to participate in the same exact trade. But yeah, links in the description for the Discord. Feel free to join. Next, this is the 160 to $1,000 trading account. My open position is currently again NZD USD, which I entered literally right here, and I anticipate it coming into around this area 59,901. So point 59,901 or point 5990, uh, just for more precise areas of interest. And and that's mainly for the fact that I foresee the US dollar going even more bullish than it is right now. On top of that, I'm in a Euro USD sell as well. So it's generally the same, but it's generally the same move. Um, I mean, I think a dilemma that I'm somewhat in right now and possibly changing the way that I'm trading in the future is if I'm trading a pair that's similar, like it has a similar correlation for the week, such as Euro USD and NZD USD, there's a possibility that instead of me taking both trades with a 5% risk on each trade, I might just go with the one that has the better, the higher um RR. So choose the one with the best RR, the best risk to reward. Let's say one is 1 to 3, but I see a similar trade setup with the US dollar, such as, for example, Euro USD and NZD USD is going for a sell this week. And the structure looks similar, but let's say NZD USD is giving me an RR of 110, right? Then I would rather go with an NZD USD gives me a risk to reward for 110, but Euro USD gives me an opportunity for one to a risk to reward of 1 to 5. So I would obviously want to go with NZD USD because it has 5 times more. I don't know if that would be the case 5 times. What I'm saying is instead of risking, mm, let's say you're risking 100 for 1,000 on Euro USD, but you can risk 100 for 2,000 on NZD USD, and you had only one to choose from, it's obviously going to be NZD USD without a doubt. So I'm more so in a dilemma where I want to take each of them just because I've been in the past I've been a victim of getting wicked out by one of the two pairs and one of them going into my direction. That can also, I mean, because you never know who's going to enter the market in at the exact market to wick people out and then go into the direction. I mean, that could have also been a time period where I could say didn't have my stop loss where it should have been. So Maybe I'm just in my own head, and I should just go exactly with only one pair, right? And not be not have the victim mentality of, oh, I'm gonna probably get wicked out by one of these, so it's something that we all go through where we find that we're in our own way. So something that I'm actively working on. I feel like as a trader, we're always actively working on something. And that's one of the things that I'm actively working on. So I just feel that I should probably share that with you guys since um, you guys are my audience, and I want to be transparent with the things that I'm currently facing because somebody on the other side, maybe someone in the audience, could probably be going through the same dilemma that I'm going through. Maybe you guys could resonate somehow. So, and it could also be a uh, healthy way to communicate with you guys and resonate. I think traders resonate a lot with each other. But moral of the story, let's move on. And I'll show you guys my second account. So instead of 613, I'll show you guys 4565. This is my second trading account, and my my equity, I started off around 975 or now 974. And you can see that I had one, let me see. I got a GBP JPY, what is it? A GBP JPY sell. And I'll show you guys the sell that I took. It was actually a sell that I'm not sure if on the other YouTube video, if I had shared the idea with you guys, but I most definitely put this trade in the Discord, in my Discord. So in my Discord, I shared this idea with you guys, and this was a 1 to 10. I mean, it shows TradeZella that it was a 1 to 7, almost 1 to 8 for whatever reason. Maybe it was a 1 to 8, I'm not sure, but probably because of the price point that I entered at. Ultimately, though, at least you guys know I was ultimately right on this, and we were able to capitalize on this sell, which is it's fantastic. It's amazing. It worked out perfectly. This was the most perfect trade, one of the most perfect trades, because as you can see, market structure, obviously it's been bullish ever since here. Then price came up here, broke structure, tested, right? Sold off, tested again, then sold off. Boom, right? And now it's most likely on its way to this price point, this key area of interest level around here below 195 point 220. So that's probably where it's on its way to at this moment. Now, that was GBP JPY. The ones that are gold are the ones that I'm either actively in or it's going to be a trade that I participated in for the week. So active positions, that's labeled active positions as gold tags. Another trade that I took this week that I profited from was CAD JPY. So I also obviously call this one out in the Discord as well. And you can see once price came to my entry point, I entered and then we took profit for 1 to almost 4. So both JPY pairs I traded this week. USD I was in, but then I closed in profit just because I didn't really like the market structure. The price is still most likely going to be respected based on what I uh anticipate happening. I can still re-enter and still be at like a 1 to 3 risk to reward, but uh I'll see if price drops below this point and might consider re-entering. I didn't really feel too comfortable with being in two USD pair two USD trades which are Euro USD and NZD USD, and then having to be in another USD pair. And then because I've in the past been scarred to where I've been in three, four different USD pairs for the same direction, and then ultimately being wrong on the wrong side of the market at the end of the day, um, for USD pairs. So it's like it's just not worth it because that's almost like if I'm risking 5%, then I'm saying I'm putting my chips on four different pairs for USD's direction. And what if it's wrong? That means that I'm risking 5, 10, 15, 20%. I'm risking 20% of my account because I think that this week USD is going to be bullish or USD is going to be bearish depending on which direction I feel like USD is trading in, if that makes sense. So considering that, that is the biggest reason why I hopped out of the USD CHF pair or trade, and it was also the lowest RR. It had the lowest risk to reward. My entry point was the 50% here, which gives a 1 to 3. And if you can look at this one, it's a 1 to 7. This is NZD USD, and then this one is a risk to reward of 1 to 6. So clearly, if there's anything that I'd exit, it's going to be USD CHF since it had the most minimal risk to reward. And so I hope you guys learned something from that. That just gives you a better understanding of how to use risk, risk management to your advantage as a trader. So this is ultimately what's been helping me in my trading journey, and I think it's important for me to share it with you guys because why not? I wanna spread value to people, and this is a great place to spread it. So keep that in mind. It's extremely important for risk management. It's taking me 6 years, 6 years to start understanding how important risk management is. I always thought that just blindly hopping into trades is how people are getting, becoming successful at trading. And that's far from the truth. The truth is, the only way to become successful at anything is to use risk management, use proper risk management. It doesn't matter what you do in life. You need proper risk management, especially if you're an independent contractor, because nobody's there to ultimately walk you through the park, holding your hand and telling you, stop where you're at before you make this decision. Uh, Look at how much you're willing to put at risk for XYZ profit. You independently need to, no matter what age you are at, need to stop, think about the situation you're about to put yourself in. So you also think about your past mistakes, which follows up with what I said in the last video. If you guys watched the last video, you guys remember me saying you have to stop. What I've been doing to help me is I stop, I think about past, present, and future. So past self would reflect on my mistakes. Or if I'm thinking as a third person and I'm looking at my history, I'm looking at my past mistakes for the course of over 6 years, I can see how many mistakes I've made. I can see the reasons for why I've made these mistakes to become unprofitable, which would be, for example, not using risk management to my advantage. That's one. So thinking about the past, I'm gonna go to future and then I'm gonna touch on present. So again, thinking about the past when trading, before making a decision and clicking buy or sell and moving your stop loss and take profit. You think about the mistakes, you think about how you've been profitable previously to help you become profitable going forward. So you evaluate your losses in the past. Then you also think about your future. So when you're thinking about your future, you think, okay, Anthony, well, These are the cards I've been given. If I use, let's say we're playing Uno. In the past, I'm gonna start from scratch. In the past of me playing Uno, when I place a +4, there's a possibility that somebody, and I can't see other people's hands, so there's a possibility. There's always a possibility, especially in card games and things like this. There's always a possibility because you don't always people don't always show their hands. If you think about the universal rule of card games and games like Uno, people aren't showing their hands. So let's think about it logically. If you're not sh or even chess, but in this case, Uno, we're playing Uno, people are not having their hands shown. And if you think about it logically, and if you think about it, uh, in this case scenario, with people not being able to show their hands, just like the market, and you have let's say you have two plus fours. If you have two plus fours and the rest are numeric, you're giving seven cards. Seven cards. Now that you're given seven cards, five are numbers, no, it doesn't matter what color. Five are numbers, and you have two plus fours. With this information, you're you're doing a 1v1 game with someone. Now that you're doing a 1v1 game with someone, this someone could be the market, right? Let's say it's your turn. You place a +4. You put down a +4, right? Then you don't know if the other person on the other side has a +4 as well. So why would you put down both +4s at the same time? The only reason why you would put down a both +4s is if those were the last two cards that you had, right? Because what if you put down both +4s, which would lead them to, if you put down both +4s, and then what if they had access to a +4 themselves? Then it would not make sense, right? Only after you take the L of having to draw 12 cards, you would know that you made a mistake. So in order to prevent that, you want to think in the past. That's why I'm preaching, think past, also think future. Now, with you thinking in the future, now you know for prevention, for risk management, to save your own ASS, you're going to want to prevent certain things like that from happening, which are the just in case scenarios or just in case situations, such as having two plus fours, not knowing your opponent's hand, and with you having a total of seven cards or more than two cards. Let's say you had more than two of those plus fours. Doesn't matter. As long as you have more than two plus fours, that means that you should not put down uh both plus fours, because if you place both plus fours and you still have more cards above your two plus fours, and the opponent puts down a +4 as well, then you're gonna have to draw 12. And you don't want that to happen. You don't know if that is gonna happen. So to prevent that from happening just in case, you're gonna put down a one +4. If they put down one +4, it gives you the opportunity to put down another +4. There's a low possibility that they're even gonna have a +4 after another +4 after you've already put down two +4s. Hope that makes sense. So that's thinking about the future. Now, if we're thinking about the present is you taking advantage of the information that you have on both the past and the future. So if you take that information on both the past, your past experience in the markets, your past losses, your past wins, you take that into account, and then you also take advantage of the future and saying to yourself, how would I even feel if I did lose? How would I feel if I did risk 50%? What would that feel like? You also think about also the time accumulated with me growing this account. How would I emotionally feel and how would I logically think about my performance if I were to risk 50% just because I feel like price is gonna go in this direction and I'm like 100% certain. But what about, let's say, 99% certain? What about that 1%? There's always a 1% chance. There's always a 0.01% chance that price can do this. So do not leave any stone unturned and always go in with proper risk management. Excuse me. This is literally the blueprint. You can not even trade the same way that I trade as a swing trader and use what I literally just broke down to you in an Uno game analogy and become a successful trader just by what I just told you. So that's literally how people are becoming successful traders, and separating themselves from other people who are not successful traders is literally the analogy that I just gave you, and it's worth millions of dollars. I just gave out millions worth of successful trading education just now. And that's what I've actively been using in my system. I'm still moderating and tweaking and refining the edge that I have so that it continues to produce more and more and more um, income or profits and less losses. So you guys are going to be able to stick around for the journey and see the opportunity it flourishes into. I'm just not like I haven't even scratched the surface. So just keep that in mind. All right. Uh, so this is how I this week has been so far. You can see net P&L is 335 just because in the future I think I've lost maybe $80 or something like that. But today you can see I'm up 431. I closed in profit 431. On top of that, I'm gonna share with you guys my trade locker because I'm most definitely using the second account on my trade locker platform. So here is my Tradelocker account. You can also visually see my entry point and my risk. So my risk is looks like it's 408. What is this? Euro USD. Edit. I'm risking 4%. Only reason I'm risking 4% and not 5% is because at the time that I entered this, it was 5%, but because I took that GBP JPY trade, it grew my account's equity and I reeled in 50% or almost 50% of profit. Um, yeah, I think it was 50 or close to 50% profit because, like I said, my account's equity was at around 4 or 9. I started off around 974. So with me starting off at 974, you can see the account's balance is now at 1397, which, in this case, you can see I came up 422, and then I also closed out in profit $12 on that USD trade. Typically you can see since I'm a swing trader, I'm entering around, I mean, I guess you can say support and resistance key levels. I really don't care what you call it, support, resistance, imbalance. It works for me, so if it works, I really don't care what people say about if it's, you shouldn't be trading as a support and resistance trader, this XYZ. I'm market structure shifts, this, that, breakup structures. It's all to me the same thing. It's all like Joe Schmo. But yeah, the support and resistance, the this, the that, it was able to make me close to $500 this week. Um, and we're halfway in, so it worked for me. But Yeah. That is pretty much my explanation on Euro USD. And then I also entered around that point where NZD for NZD USD. So I'm looking to capitalize about 300. And you can see on Euro USD, I'm looking to capitalize about another 300. So if both hit TP, then that's 422 plus 12, which is for the week 435 plus 300. That's 435 plus 300 times plus 300. It's about $1,035. So that means that I'm bringing the account from $975 to over $2,000, which would be about maybe 2,050 or $2,035. I'm doubling the account in making 100% profit in only a week. And it's like, what other opportunities are there where you place your bets and only risk 5% per trade or per direction of the market, where you have an edge? Because I do have an edge. The edge is in the footprints and where the market anticipates on going next. So I'm not just blindly taking these trades. I'm obviously doing surgery with these candles to see which direction price wants to move, starting from the higher time frames as a swing trader, right? I'm not looking at these mac these micro seconds candlesticks like what a lot of these other traders are doing. I'm not doing that. I'm not looking at the 30-second, 15-second trading NQ and whatnot. I mean, I will trade NASDAQ and US 30, but I'm not like looking for, if I'm trading it, it's going to be a swing trade. It's not going to be a 15-minute candle during New York at 9:30, catching a 10:30 move, right? I'm looking to hold a trade for, I'm accepting that I'm going to hold a trade for as long as it hits either my stop loss or take profit, essentially. And that could take 2 days like it took for me, or one day or 1 to 2 days like it took for me, or it could take 14 days. It could take a month. I'm not really too sure on how long it'll take me, but on average, I would say 1 day to maybe 14 days. I mean, I really haven't seen any trades as of yet go to up to 14 trades, unless it was me like back testing to see what's possible to trade how I'm trading, essentially, but which is daily 4 hour, right? I'm looking at the daily direction and I'm looking at what the 4 hours presenting so that I know how to position myself on lower time frames. And so that's pretty much how I essentially trade. I'm just really good at that because I've studied that. I studied higher time frames and lower time frames and stuff like that for a good amount of time. And I've taken a lot of losses. So now we're gonna start seeing uh my work ethic, I guess, on the charts and on my P&L, my profit and loss statement. So, what is this? Reflects the percentage of your winning trading days out of total trading days. So, uh, 15%. I don't know if that would be considered win rate or reflects percent of your winning trades out of total trades. Maybe 13. I don't know. I guess my win rate is 13% as of right now, but as you can see, like I haven't even really traded on this account other than May this year. So I only took 1 month to trade this account outside of this, and I was trading maybe $100 on this account. Then I withdrew it, clean slate, $0. I think I moved the money that was on this account to the other account, and then I probably blew it around that time in May. Then I had to re-upload another $100, into it and stuff like that. But other than May of 2025, I didn't trade until I started trading literally like yesterday, which you can see. I got two open trades, NZD USD, Euro USD, and then I had some closed trades, GBP JPY that hit my take profit, and USD CHF, which I manually closed. Funny thing is, I woke up to at London session. Here's what I'll tell you. So I entered around here, price dropped. I was obviously expecting for price to just start plummeting from this point on. Uh, but actually, my stop loss was right here. So when my stop loss from my stop, or actually right here. So from my stop loss being around here, oh, so this makes sense. This is why it says like 1 to 7, because my stop loss wasn't above here. It was actually above here. So I entered somewhere around here, right? Or around here. Price dropped, so I was in profit. It was probably about 1 to 1 at this point, or 1 to 2, and then price came back during London session. So when I woke up around London session, I didn't even have like an alert set for London session for me to wake up. I just something told me to wake up because I typically wake up every day around London session for some reason. Probably like mentally conditioned myself to wake up around London session. So I wake up London session, I look at the charts, and I'm like negative $30. And I'm like, okay, well, if price doesn't, my uh philosophy is, and this is how you should think if you want to be a successful trader. So my philosophy is, it used to be, oh, well, I mean, London session, I'm negative. I'm probably gonna just price is probably gonna hit my stop loss, so I might as well close out. I'd rather not lose $50. I'd rather just take the L on 30. But me now, just because I've seen in my past that I would exit a trade and then it'll turn out being the right direction, but I just exited because I had fear of loss, or fear of hitting stop loss, right? Or the same thing. So now I'm like, okay, well, an extra negative $20 isn't gonna hurt me. I'm already at negative 30, right? Another extra negative 20 if price hits my stop loss isn't gonna kill me. And I've already accepted the loss, so it really doesn't matter at this point. So that's how I'm thinking at this point. I didn't always think like that, but it takes a good amount of probably losses. I would, in my opinion, uh, I would say it takes a certain amount of losses for you, or maybe a specific loss for you to change the way you think, change the way you think about probability, because it's realistically a lot about probability. So price literally almost, it was like how much it was around here. So it was literally like 1 point away from taking me out. Uh, yeah, but I mean, maybe around 3 o'clock. So around 3 o'clock, we were probably around like here. So could have been like 3 to 10 points away from stop loss, hitting my stop loss. I just went back to sleep, closed my eyes, woke up around like, I think I woke up around 6 to 7 o'clock, and I look at my trade locker, and I'm like, where's the GBP, JPY trade? Like, it's not even here anymore. I'm like, damn, it probably hit my stop loss. Lo and behold, oh, 8 o'clock. I probably woke up around 8 o'clock. So I guess, yeah, after 8, I woke up because I remember I woke up and I wasn't in the position anymore. So I wake up and I'm like, I look at GBP, JPY. I'm like, I must have, I must have hit take profit. I hope this spread didn't catch my stop loss. You know what I mean? Because that would be, not a good feeling. It's happened to me before where prices came to my close to my stop loss, and then it was close enough because of this how big the spread is to take me out, not even exceeding my, threshold of my stop loss price and then going in the direction. So I was hoping that wasn't the case, but it was close, but it didn't go that way. So I'm thankful for that. And then, lo and behold, hits my take profit and wipes me, or not wipes me out because I took profit for 422 on the second account. But yeah, I mean that is pretty much how my morning went for GBP JPY. As you can see, Euro USD is doing what it wants. I mean, really don't mind how if this even hits my stop loss. I doubt it's gonna hit my stop loss, but I mean Euro U what is this? USD JPY is probably gonna go bearish. USD CAD has gone bearish. I was waiting for this to go bullish on the 4 hour, but it had second thoughts. Um, as you can see, this is how stuff is going. Canadian dollar looks more bullish than USD. Oil, I'm waiting for it to come up here so I could probably sell. I'm not really an oil type of trader, but I want to show you guys why I think US dollar is bullish, right, for this week. And here's why. So the daily time frame, you can see this is the most previous high from the daily standpoint, right? Now, with this information, now we're going to look for a low. So since price broke below this area, we'll see where price closed at. The most recent close was here. Now, with this information, we know that if price wants to move back, typically, like from experience, I've seen price pull back, right? It pulls back almost like a scrunchie. It expands and then retraces, expands and then retraces. So if we take the information of price from previous wins and losses, I've experienced price expand, and then after it's done expanding, it retraces back to on average 50%. Now, I wouldn't place 100% of bets on that because if we take USD CAD for an example, you can see that price on the 4 hour time frame has created a high and a low. Once price created a high and a low, if we take this high and take this low and act as if it's going to retrace to 50% before going and creating a newer low, we can see that price came back to virtually, I would say 40%, close to 50%, right? But around 40%. So if we see that price came to around 40% and created a newer low instead of 50% retracement and then creating a newer low, then that means that we're not always 100% right. There's always a possibility that the other person has a plus four. So now you can see where my philosophy is. Now you can understand my philosophy. My philosophy is similar to Mark Douglas's philosophy, which is you don't always know what direction the market is going to favor, which helps you understand why and how important risk management is in order for you to become a successful trader, swing trader, investor, uh, day trader. It doesn't matter. Risk management is key. So, what was I gonna say? Excuse me. Back to the DXY, which is the dollar currency. This is the value of the dollar currency. So with this information of us looking at the daily time frame, we can clear as day see that the 1 hour time frame has shifted from making lower lows. So we're making lower lows, shifted from lower lows to higher highs. Now, once price shifted from creating this low to this high, what I've done is I've entered in this location. So this was my area of interest. If I was wrong, I'm risking 5% And if I'm right, I'm gaining about 5, 10, 15, 20%. I'm gaining 20% of equity on any of my accounts, my first account or even my second account. And if I'm risking, typically if you're trading like how I was trading $1,000 account, for example, right now it's currently around like 1,300 or 1,400, but um let's say at this point if I were to trade, let's say if it was 1,000, 20% of or mm, amount increase in amount given by percentage. So amount is $1,000. If we start off with $1,000 and then we increase this account by 20%, that's gonna that's gonna bring us to $1,200. So you're risking $50 for $200. I mean, clearly it makes sense and you can see that it's working. So why not just trade the same way that I'm trading? I mean, it just makes the most sense. And it's not like we're trading on the seconds. I'm not trading on really like I mean, maybe the minutes, just because obviously 15 minutes, 30 minutes, 60 minutes or an hour, I guess, would be considered minutes. But, uh, I just, this is how I trade. I don't want to, encourage anybody to trade any way that they're not comfortable, but I just want to share with you guys the way that has proven to work for me. And hopefully this hits take profit. If it doesn't, I'm out 5% on the Euro USD trade on top of another 5% from the Euro USD trade. So hopefully, and if I do capitalize on both trades, then that would mean that's about a 1 to 6 on top of a 1 to 7, which would mean my account could grow 7 plus 6 is 13 times 5. 65%. Literally in a matter of maybe a day to 14 days. On average, it seems like those are the time frames of when the way that I trade would hit. I mean, if you're a day trader and you're looking at 15 or 30-minute time frames and you're trading on the seconds and stuff like that, then you're typically on average going to see your trades either hit your stop loss or take profit in a matter of less than a week, right? Maybe 1 to 5 days, rule of thumb, in between somewhere around there. Um, and I mean, with that theory, we can even back test. Like, let's say if we were looking at 30-minute structure, we can see, hey, from this pullback, so look, we get this high to this low. So higher high, higher low, higher high. Let's say you entered here, boom, hits here, take profit with this candle. That's 2 hours. Not even, that's not even a day, right? That's less than 24 hours. Let's say we get another higher high. So we get our higher high here, boom. Let's say we entered here, boom. Price hits take profit on hour 3. Again, that's trading on the smaller time frames. Uh now that we see now that we see, let's say this structure right here, low, higher low, or a lower high, lower low, lower high, boom, price hits our take profit. But by this candle, it's like an hour. You get an hour. You're only in the trade for like an hour. I mean, obviously, it really depends on how you want to trade. You can trade anyway. It's fractal, right? Virtually, it's fractal. I mean, but virtually you have a good amount of information to make financially educated decisions on when to get in and when to get out and how much you should properly put at risk just in case the market does not go in your favor. So that is pretty much what I wanted to share with you guys today. And like, comment your best. I want you guys to genuinely comment the best advice or the best information. Um, this is for educational purposes only. So take this education with a grain of salt. I'm not a financial advisor, so I wouldn't really say advice. It's really informational. But I want you guys to comment, genuinely comment what you guys have taken from this video. I want to continue spreading a lot of free value, and I do spread a lot of free value in the Discord. So you guys continue joining the community. It is spreading, and there's a lot of value given on a daily, on top of weekly basis. If I start getting enough, I think when I come up with a good amount of people, I'll start doing weekly Zoom calls. But until then, once I get to a certain number, I'm gonna say once we get to about 100 people in the Discord, then I'll start doing Zoom calls on a weekly basis. So yeah, if we get to 100 people in the group chat, then I'm gonna start doing weekly Zoom calls, weekly free Zoom calls to spread knowledge and value for free. So continue joining the community, like, comment, subscribe. Again, comment your favorite thing that you've taken as far as value goes from this video. And yeah, thank you guys for watching as always. I appreciate your support and good luck on your trading journey. Peace.